Investing. It's a word that often brings to mind images of Wall Street brokers in sharp suits, bustling stock exchanges, and complicated charts filled with numbers that seem to dance around like they're in a Broadway show. But let's take a step back and peel away those layers of complexity. At its core, investing is simply the act of putting your money to work with the expectation that it will grow over time. Think of it as planting a seed in the ground, nurturing it, and watching it blossom into something beautiful and fruitful. Now, you might be wondering, why should I invest? Well, let's talk about the future. We all have dreams. Maybe it's a cozy retirement, a new home, or even that dream vacation you've been daydreaming about. But here's the catch. Money, like a good wine, doesn't just sit there and get better with age. In fact, if you leave your money sitting in a regular savings account, it's likely to lose value over time due to inflation. Inflation is that sneaky little thief that erodes your purchasing power, making it more expensive to buy the same things in the future. So, if you want your money to grow and keep pace with or outstrip inflation, investing is the way to go. Let's break it down a bit further. When you invest, you're essentially buying a piece of a company or a collection of assets. This could be stocks, bonds, real estate, or even commodities like gold. Each of these investment types has its own set of risks and rewards, but the common thread is that they all have the potential to grow in value over time. Stocks, for example, represent ownership in a company. When that company does well, so do you. If the company makes a profit, it might share some of that with you in the form of dividends, or the stock price might increase, allowing you to sell it for a profit later on. Now let's talk about risk. Investing isn't without its uncertainties. The stock market can be a wild ride with prices going up and down like a roller coaster. But here's the thing, with higher risk often comes the potential for higher reward. It's a balancing act. If you're just starting out, it's important to assess your risk tolerance. Are you someone who can handle the ups and downs, or do you prefer a steadier, more predictable path? Understanding your comfort level with risk will help you make informed decisions about where to put your money. One of the most powerful concepts in investing is the idea of compounding. Imagine you invest a sum of money today, and over time, that money earns interest or generates returns. Instead of just earning interest on your initial investment, you also earn interest on the interest. It's like a snowball effect where your money grows faster and faster as time goes on. The earlier you start investing, the more you can take advantage of compounding. Even small amounts can grow significantly over the years, thanks to this magical phenomenon. Now, let's talk about diversification. This is a fancy term for not putting all your eggs in one basket. If you invest all your money in a single stock and that company hits a rough patch, you could be in trouble. But if you spread your investments across different assets, stocks, bonds, real estate, and maybe even a little cryptocurrency, you're reducing your risk. Diversification helps cushion the blow if one investment doesn't perform as expected. It's like having a safety net that allows you to sleep a little easier at night. You might be thinking, okay, this all sounds great, but where do I even start? The good news is that investing has never been more accessible. Thanks to technology, you can open an investment account with just a few clicks on your smartphone. There are plenty of user-friendly platforms and apps designed for beginners, making it easy to start your investing journey. Many of these platforms offer educational resources to help you learn the ropes, so you don't have to feel overwhelmed. One popular approach for beginners is to consider index funds or exchange-traded funds, ETFs. These are investment vehicles that track a specific index, like the S&P 500, which represents a broad swath of the U.S. stock market. By investing in an index fund, you're essentially buying a little piece of many companies at once, which helps with diversification. Plus, they often come with lower fees than actively managed funds, making them a cost-effective option for new investors. Another important aspect of investing is setting clear goals. What are you investing for? Retirement, a down payment on a house, a child's education. Having specific goals in mind will help you determine your investment strategy and how much risk you're willing to take. It's like having a roadmap for your financial journey. And remember, investing is a long-term game. It's not about trying to time the market or make a quick buck. It's about staying the course, being patient, and allowing your investments to grow over time. As you embark on your investing journey, it's essential to keep learning. The world of finance is constantly evolving, and staying informed will empower you to make better decisions. Read books, listen to podcasts, and follow reputable financial news sources. Surround yourself with a community of like-minded individuals who are also on the path to financial growth. You'll find that sharing experiences and insights can be incredibly valuable. In conclusion, investing doesn't have to be intimidating. It's a powerful tool that can help you achieve your financial goals and secure your future. By understanding the basics, assessing your risk tolerance, diversifying your investments, and staying committed to your long-term strategy, you can navigate the world of investing with confidence. So, take that first step, plant your seed, and watch it grow. Your financial future is waiting, and it's time to embrace the journey of investing with open arms.